ladies and gentlemen, a warm welcome from my side. For those who don't know me, my name is Ron van Blois. I'm the co-founder and the chair of the Senior Housing and Healthcare Association. We launched the initiative 6 years ago, or actually 5, and do we have a clicker? Yes. So we're celebrating our 5th anniversary, and it's really 1 year of, I would say, festive moments of thought leadership. So we had a great MIPIM, we had a great summit in Brussels, and the EXPO Real is one of our highlights of the year in our famous International Investors Lounge. And it's also a momentum to announce some new members, because only in 2025 we have welcomed 25 new members. And I'm delighted to announce that quite recently parties like Christian Co., Praemia, Azora also joined SHHA. So the family is growing, the family is becoming more colorful, also in terms of geographical diversification, and that's really lovely to see. This year we had a Germany focus. So we had an excellent series of activities focused on Germany. So we did a webinar on Germany with, I think, a record-breaking number of attendees online. And it was an excellent conversation. And also the third activity after Expo Real will be a SHHA event in Hamburg. So all our members are invited to join this session at the headquarters of Swiss Life Asset Managers. And next year we will have a different geographical focus, and that's Spain and France. Because we do believe that those mature markets need a little bit more in-depth underwriting. Because we see a big, let's say, differentiation between senior living, assisted living, nursing home capacity. So I think those mature markets also do need some extra underwriting. Yeah, and I think people already know that when we have Expo Real, we also publish our yearly report. So, yeah, I'm delighted to actually hand over this one. And actually, I would like to hand over it to our Chief Operational Officer, Sylvia, and also because Sylvia is the big power behind the SHHA. So let's give a big applause to Sylvia. Because we always say that running a SHHA needs people on the background, needs powerful people, and to my opinion, Sylvia is really one of the powerful people of the SHHA. So maybe a final word from you, Sylvia, and then you can intro Richard Betts as our moderator.
Thank you so much for the introduction. Really happy to see such a crowd here around us. And I think it's not only about our power, internal power, but it's also about the power of our association with our members and partners. So I'm really delighted that we have an opportunity to work with such a fantastic group of companies, people, and it's making actually moving the senior housing and healthcare sector forward. So now, not to take time, Richard Betts, who will moderate the sessions. First one on the global and European scope, and then the German market. So I hope you will enjoy it. Richard, floor is yours.
Great, thank you very much. That is super. Let me pop that down there, I think, probably. So, yes, as Sylvia mentioned there, we've got 2 super panels coming up and then also a fireside chat in between. First panel is going to be looking particularly at global investment opportunities, and then the second one is going to drill down into the German market. So forgive us if we don't focus too much on the German market in the first one. So if the speakers could join us, that would be great. We've got Kevin Beirne, who's Head of Retirement Living for Octopus Real Estate. We've got Raoul Thomassen, Chief Operational Officer for Aedifica. Jennifer Dixon, who's founder and CEO from JD Solutions, who has joined us from the US. So you've come the furthest, Jennifer, for certain. Yann, who's Head of Healthcare and Education at Praemia REIM, and Frédéric de Rousseau, who's CEO of Clariane. Great to have you here. Let's just start in literally 30 seconds, just for who you are and what you do, just so that everybody here knows exactly which side of the fence you're on. Let's start with you, Raoul.
Yes, good morning. My name is Raoul Thomassen. I work with Aedifica in Brussels, responsible for the operations. I'm the COO over there.
Great, and the closer we have the microphones, I can see people beginning to lean in already there. And if you are struggling to hear, do come and get a headphone and you will get simultaneous sound from there. Great, thank you.
Thank you. So Yann, Balaÿ, nice to meet you, from Praemia REIM, which is an asset manager, and we do have a little bit more than 17 billion euros of asset under management dedicated to healthcare.
Great, Jennifer.
Hi, everyone. I'm Jennifer Dixon, founder and CEO of JD Solutions Group in the United States. We are a strategic advisor and consultancy, and our specialty is sales, revenue, and operations in senior living.
Great, Kevin.
Hi, good morning, everybody. I'm Kevin Beirne. I'm head of later living for Octopus Capital. We're based in London. We've got about 4.5 billion euros of exposure both to care homes and to senior living, and have recently opened an office in Madrid. So clearly following up on Ron's position, to take a closer look at that market.
Great, Frederick.
Hello, my name is Frédéric Durousseau. I'm CEO of Clarion Real Estate. So Clarion is an operator, European operator, based in 6 different countries with 65,000 employees. And we are doing long-term care, we are doing clinics, health, and also co-living solutions and assisted living.
Great. Let's pick up on, I suppose, some of the changes that we've seen, perspectives over the last 24 months. What have you seen changing in your markets? What are some of the trends that you're seeing? Anybody can start, but let's start with you, Raoul.
Yes, well, I think what we've seen, at least in our markets, investment volumes slightly going up. The yields seem to be stabilizing, which also underpins the valuation. So there is more activity in the market, I would say, at least in several of the jurisdictions where we are active. Yes.
Great.
Pretty much the same. Just as you remember, we do invest in all continental Europe, so we monitor French, German,
Yeah, and
Spain,
if you
Italy.
pop that a little bit closer, because I think these microphones are
So
quite
we
sensitive.
monitor different
Much better.
countries in Europe, especially continental Europe. So same that have been said, we have been seen raising of interest for healthcare portfolios in terms of volume. Even if the transactions are longer than 24 months or 36 months before, but definitely we see some sale process getting to an achievement, which is positive for the trends, and we also answer to some interest of potential investors that we didn't know before, but interesting into the healthcare and the nursing home segments.
Okay, great.
We are definitely seeing the increase in transactions in the United States. I think what's really interesting, the dynamic that's playing in, is we have very highly occupied properties because of the slow growth of new development. So we're starting to see really record occupancy levels, and that creates some interesting situations in the market.
Okay, Kev.
Yeah, we're seeing, I guess, 2 major buckets. One is in the care or nursing home sector, the other in senior living. So certainly in the UK for nursing care, we're seeing quite a lot of corporate activity, some fairly well-discussed deals that are out there and will drive some pretty significant numbers in the current 12 months in terms of trading. But also a very stabilized yield environment now. We're seeing our OHF fund really continue quite strongly. Its returns are bang on, as they always are, really stable sector to invest in, and then demonstrating to LPs that, care homes, demographics, is a safe space to invest in. It's really outperformed a lot of other long income asset classes over the last 24 months. And then in senior living, really what we're seeing is senior living has huge potential in terms of numbers. It's catering for the 30% or near to of older people we're going to see across Europe in the next 10 years, but not in that smaller care home sector. So real scalability, and crucially, I think investors are really seeing it as one of the key value add areas. If you want to make a value add return from your real estate investment in the living sector at the moment, then a real strong interest in that particular sector, because despite the sort of headwinds that we've seen elsewhere in the living world, I think it's genuinely the area where you can still deliver those returns back to your investors.
Okay, good. Frederick.
For operators, it has been a challenging time in the last 24 months. Many reasons for that. First, the financial environment was difficult, higher interest rates, higher inflation, so the difficulty from operators to push back the interest to the client. So that's one thing. Then, of course, the sector is recovering, so meaning that slowly we had difficulty, of course, with post-COVID, both inflation and situation due to the fact that occupancy rates were low in every operators. Now, if we compare with 24 months ago, we are about 2 points occupancy more. So let's say we are at around 90-91% now. And of course, you know, it's the last percentage point that are the most important for operators because we are in a fixed cost business. The rents, of course, are fixed, but also many personal costs are fixed. So it's why the fact that it's going better is a huge relief, at least for us.
Okay, good. Go ahead, Yann.
Just one note, as Jennifer mentioned in the US, in Europe we can see also a huge delay in terms of new construction, putting more focus on the existing assets. I think that it's very difficult for investors, but also for operators to continue to organize brand new development because of the cost of the land, cost of construction, and difficulties in terms of financing, which put more pressure, as I said, on the existing assets.
Okay, good. I wanted to pick up a little bit on the transactions in the market. You mentioned, Kevin, there about the UK market and Welltower, obviously. Last year, I think it was Balaÿ at the same time. So I suppose, what are we seeing in terms of the transactions? Because there have been some quite major ones. So it'd be interesting just to pick up on your views about how the transactions are going. Is this a sign of a positive change in the market? Who wants to pick that up?
Yeah, I can. So last year it was around EXPO with the entrance of Civitas with the Balaÿ deal here. We haven't seen that much repeat activity of such size deals in continental Europe, but more or less since then in the UK there's been quite a number of transactions. And especially now Welltower catching the limelight there after Danforth and HE1 now also rumored to take over Barchester. So that would be a substantial entrance into that market. From their point of view, totally understandable. I mean, they see the opportunity. UK being a very attractive market, and they are trading above NAV. So their cost of capital to make an attractive or aggressive pricing there is definitely allowing them to make such moves. Yeah.
Okay, good. And Kevin, what's your sense of the transactions? Is that a positive indication? Are these one-off different types of capital looking? What's the situation?
Yeah, I think there's probably a combination, Richard, to be honest with you. The deal that you're referring to, or deals, really isn't a surprise. I think you're right. I think when you're looking at that platform and where it's trading in relation to NAV, and actually some of the flexibilities it's got probably to reach into the OpCo as well as the PropCo gives, some of the American REITs, I guess, will make the UK and other parts of Europe potentially interesting for them, without question. But it's market consolidation, but it still makes the biggest platform, probably under 12% in the UK. So it's still gradual. And then in terms of the more organic growth, we're seeing lots of more nascent operators come forward, and at the other end of the spectrum, if you like, almost replace some of that diversification with new platforms, really good management teams, and actually investments that we can look through we're working with a couple of joint ventures, which is opcos and developers coming together in the UK. It's quite an interesting structure. It's created some, quite solid performance from our perspective. So the deal flow on the deal by deal, if you like, is probably as strong as we've seen it for some time. There's a really good pipeline coming through from our perspective that we're happy to underwrite and invest in. And our standards are quite high when it comes to underwriting. So hopefully that's a good sign.
Okay, good. And consolidation, I think, is an interesting point. And yeah, maybe let's drill down into that. What's driving that in Europe? How positive is that for the market, do you think, in terms of the consolidation that we're seeing?
Two types of consolidation. Consolidation of the operators first, which was very active in the last 4 to 5 years. I think that it has been a slowdown since the last 24 months. We are pretty sure that there is still a huge consolidation to be organized in some countries, like for instance in Spain and in Italy, when we see some operators having the interest to organize consolidation of the market, that will drive for us also opportunities in terms of selling leaseback and investment, and consolidation in terms of peers. So especially talking about Aedifica and Cofinimo, maybe I will let Aedifica to speak about this consolidation that we see from a very positive point of view.
Okay, and let's pick that up now, Raoul, since we're on that, the consolidation, obviously.
Yeah, so also on the landlord side, you see this activity. We have a transaction that is not yet complete, but underway. And that's driven through a number of factors. So obviously, a larger platform will help on the asset management side. It will help in the capital market side. In general, it is true that over the last years, you see the increasing pressures that require you as an asset manager just to be more on top of criteria for ESG, criteria on the quality of care, things that drive you into a position where you need professionals and bigger teams to handle that. And that's where size can really make a big difference.
Yeah, go ahead, yeah.
We're also seeing a good deal of consolidation, especially on the investor side in the United States. But I think what's really fascinating, there's a parallel to that in that we are really in this kind of, almost like a golden age of entrepreneurship, of people who want to become operators in senior living, and they really want to be able to specialize their focus. And that's something that the REITs in the US are looking for. They're looking for that ability to have a strong operating model and proving success. So it's very interesting to be able to see that come to life in the markets.
Okay, good. And just in terms of some of the other trends that have been mentioned here, what are you seeing from the US that we might expect to see here later?
Well, you really can't understate the impact of technology. And the impact of technology on the workforce, the impact of technology in terms of how our prospective consumer finds us, reaches us, learns about us. None of that can be understated. While at the same time, you can't really, as an owner and operator, say, oh, I just want AI for the sake of having AI. What does that even mean? So you really have to understand what is the problem that you are trying to solve and what is the right tool to be able to have. So I would say technology as an overarching, probably overly broad theme is going to be continued topic of discussion.
Okay, good. It would be interesting, I think, just to pick up a little bit in terms of international capital. Are we seeing Europe, UK, Europe, attractive in terms of international capital? Are there new players coming in? What are we seeing? Kevin, let's start with you.
Yeah. Look, there's certainly a very, very strong interest in UK and Europe. And actually, I'll just use Europe, if you don't mind, Richard, as including the UK on this occasion. So look, we are seeing strong interest continued, I think, in the kind of macro around older people and an aging demographic. I think every investor I speak to, every potential LP, whether that's here in Europe, in the Middle East, in the States, or indeed the Far East, gets that position. And so there's an overwhelming desire to be in the space. I then think it's really just about thinking in what sector is that money being deployed into? in terms of return profile. So, yeah, we are still largely in an area where investors would like to get a value-added return above all else, and that's the obvious bucket. It's challenged. I think several people have mentioned issues around construction, some risk, although we're starting to see that stabilize and burn off now. So I think we are moving into a period where perhaps, at least from a construction perspective, that's much easier for investors to swallow. I think we do want to see yields come back, but we are looking across a 5 to 10 year horizon. So I think there's good sense that control what you can control, and that's your yield on cost, and target, where you need to be or hope to be in terms of yields, take a good view of it at the outset. And then on the longer income side, look at our main fund, OHF. We've just raised another around nearly 70 million in the last quarter. Really good pipeline of incoming investment into that. It's private markets, but it's a real good mixture of pension funds who want broadly matching income across Europe, really strong. And as I hinted before, I think increasingly we're seeing healthcare where perhaps investors used to think, is that an area where I want to be? And I think we've demonstrated that actually at Octopus, where you lean into that risk and really manage it. We have 4 nurses in our OHF underwriting team, understand how to manage that risk. Actually, you de-risk it. And the outcome of that is, a sector-leading performance for that as a real estate fund in the UK. So that's kind of driving interest. It's that performance and stability on the long income as well that's really working to bring new investors in as we see it.
Okay, good. Yeah, go ahead, Yann.
Well, just in terms of lexic, from my French point of view, it's hard to speak about value add for healthcare or for nursing home sector, especially in France when there is authorization, it's highly regulated, and generally when you develop a brand new nursing homes, you have already your operator. So, in fact, you don't take so much risk for the development plus the leasing of your assets. So we prefer to speak about core or core plus, because in fact there is a huge need of investment, as I said, in already existing assets in order to resolve some capex backlog of assets that have 20, 30 years old, and plus to meet, as you said and mentioned, some objective in terms of ESG. So we are pretty sure that there is interest to develop core plus strategy in order to offer to some investors better yields than core investment that are much more around 5 to 6% in terms of cash on cash.
Okay, good. And Frederick, from your side, I suppose, how are you seeing in the different jurisdictions you're in? What are you seeing from an operator perspective? How do you react, I suppose, to some of the themes that we've had here?
We know very well the actors. If we are talking about Cofinimo, Aedifica, if we are talking about Praemia, REIM. So the consolidation of the landlords, is seen from our point of view as a non-issue. It could be maybe said even that we welcome this due to the fact that we have already good and well-established relationships. It's also true that maybe Aedifica Cofinimo will be my first landlord, but I will be the first operator from Aedifica Cofinimo. So it's also true that there is a kind of balance. And when we want to have significant impact on assets, as it has been explained by Yann, we need some capex, we need some ESG investment, and then it's easier, you don't have to convince for hours big investors, big landlords, whereas if you have only landlords with only 1 building or 2 buildings, they will not, maybe with their age, and they won't have the same reasoning, the same way of looking at the assets. So for us, I would say it's a good news to have also this consolidation. It's educating, let's say, the market. And then what is also interesting, what we see is that this consolidation, both Cofinimo, Aedifica, or Praemia, REIM, it's giving maybe a way for external investors to take some stakes also in Europe. Because some deals that we could normally do, let's say with Cofinimo, Aedifica, or Praemia, REIM, maybe they cannot do it now, or they have other objectives or challenges, and then it opens also the way for, and you see big international players like Parkway from Singapore, like Litcrest, like other international investors who become a bit skeptic. So I would be interested, of course, to have a Jennifer assessment on this, but they become a bit skeptic of investing in the US in the current political climate, with much uncertainty, with much, tariff one day, no tariff the other day. For this, I think Europe is a very, very interesting market from an international perspective.
Okay, let's pick up a little bit on that, Jennifer, but also I'd be interested for those who are interested in looking at what's happening in the US, for example, as indicators of what will happen here. What are you seeing in terms of demand, take-up, seniors? What sorts of assets are people looking for? I guess, be interesting just to pick that up as well.
Sure, that's a big topic. Affordability is something that is hugely discussed. So when you look at the different types of assets that we might have across the U.S., it's really important to understand, are we looking at something that is, really built out as a luxury project, right? That is, for a very specific group, or is it something that is really deemed more for the middle market? We've really seen, I think, the early trend of understanding what value-based care is. And that basically means we are connecting the care of our residents to the outcomes, and really adding that level of transparency into how we care for people, and how does that actually lead to preventing illness, preventing falls, and stronger partnerships with the healthcare systems around us. But back to the affordability, that's definitely something that is a big discussion for all of us, because we have this huge wave of population who are going to be looking for options, everything from active adult to CCRCs to independent living to memory care. So there's certainly nothing but opportunity. Last comment I will make is that a trend that I have seen that I think has been a positive impact trend is the role of the asset manager with operations and the operator. We've seen a much, much closer relationship, and that has yielded very positive returns, because when investors can understand what CapEx needs to go into a property, and they know and they're supportive of where that needs to be invested, and they can move quickly, we can change the business a lot faster when we have that kind of support. So that relationship has been huge.
Okay, good. Just in case there's anybody who's arrived at the back newly, there are headsets available. So if you can't hear where you are, grab a headset and then you'll be able to hear. If there's any questions as well, if anybody's got any questions, now is a good time to ask them before I go into a bit more of a quick fire version of this for the last 10 minutes, 7 minutes. So, quick fire, geographies. What do we like? What do we not like? Where are the opportunities in terms of geographies?
I'll dive in. Well, clearly, we think the UK, we think Spain, we certainly think Germany, 3 very obvious opportunities. France also, I'm not going to skip past that. Maybe it's a slightly more mature market in some of those areas. It's got great coverage both in the care home sector and senior living. But, just hearing Jennifer speak, the fact that I think is really, really interesting, I'll leave you with 2 quick fire points on this. One is, look, penetration rates in the US are around 7 and sometimes over 7% for older people living in senior living. You'll find it hard to find anywhere in Europe where it's above 1%. that delta is the opportunity, and it's massive from a living perspective. Just think about how many units are required, how many billions of pounds worth of investment. There is an opportunity to do something really valuable and really good. So, I mean, that's a real fundamental from our perspective about what that opportunity looks like from an Octopus perspective. And yeah, we're looking to establish that in UK and Spain on a rental basis, because the second fact is, our best platform in the UK, Rangeford, leases up 4 or 5 a month, brilliant, it's mid-market, but that sales model is attractive to one audience. When I start to look at rentals, sometimes when I look at a catchment, 4 times more people can afford, with a big A affordability, to rent over buying. And somehow, I think that story of the States going from a for sale to rental model equal that 7% penetration rate somewhere along the line. So 2 big messages from our perspective.
Absolutely. I'll jump right on that. I think in terms of, market opportunity, I'm so intrigued and positive about the move to introduce a rental market in the UK. I think that it's going to allow you to reach a lot more prospective consumers. Certainly, all of the market activity in Spain and Germany, that is, wonderful to be able to see. In the United States, we have a lot of growth right now in secondary and tertiary markets. So the Southeast, the mid to Southwest, Texas, New Mexico. So, I mean, really, there's so many different markets to look at in the United States. So I think all of those are opportunities. And we're even seeing in the Southeast, the real growth of taking, former hotels and turning those into, investing in turning those into senior living communities and looking at, what can the return on that be, has been very positive.
Okay, good. Any other? And you are allowed to say Germany if you believe Germany is the right opportunity at this stage with 5 minutes left. Go on.
Well, from our point of view, we are interested in all the geographies, especially because the demographic trend is the same in all the European countries. So there is a huge need of investment for care homes, but also for senior living. And also because some countries can bring some other diversification. For instance, in France, you can diversify your investment in the healthcare with acute, post-acute, mental health, care homes, etc., which is very developed in France. Maybe one comment about senior housing or assisted living. The business model in France has been challenged in the last years. Obviously, the idea of senior living, so apartments dedicated for elderly people without care staff, sounds very positive. But I think that business model needs to be found for the operator and for the investor. But I'm pretty sure that we'll find it in the next months.
Okay, good. Raoul.
So from our side, I have to agree with Yann. We are active in 7 countries. We would like to grow in each of them because there is that demand. But to name some favorites really requires also to distinguish, are we speaking about greenfield development? Because that today is not possible in several of the markets where we are active. But I see opportunities for that. For example, in Spain, Kevin also mentioned that. We are also developing in Finland where we have our own developer. In the other markets, it's going to be much more about having opportunity to acquire existing stock and maybe in a core plus approach to redevelop some of the assets that we already have. Yeah.
Okay, good. And Frederick, you're obviously looking at it from a different point of view, but still looking to grow. So.
Yeah, absolutely. We are present in 6 countries. We have developed most, let's say, in the last years in France and Germany. We will develop most in the coming years, still, of course, in these 2 countries, but also in Spain and the Netherlands. Netherlands has not been mentioned until now. It's true, it's not a very big market, 16 million inhabitants. At the same time, you have very favorable public spending on health and healthcare. And for instance, we have co-living solutions in the Netherlands regarding Alzheimer's disease, and it's I think it's it's a way that has to be developed in all countries, but let's say that it's not possible to develop in all countries. The support that does the Dutch government is much higher than any other government. So as an operator and also as an investor, you have to look at who will pay the bill in terms of is it your customer, is it the government, and you see that in all Europe, government finance are under pressure. So it's always good to keep that in mind, see how they will develop, what is health spending, how it will be developing in the coming years, and I think this item will favor at a certain moment governments who are wise on spending. So meaning Germany, meaning the Netherlands, also Italy. Italy is coming back, and I'm sure that France will come back.
Okay, good. And just for anybody who's maybe looking at the market for the first time, what sort of returns can they expect in the market in Europe? Anybody want to pick up the return side?
Yeah, I think certainly I said for senior living, I think you can certainly expect a strong value add from a development perspective if you get it right. And I noted the point about the French operator, and there's a really good point there, isn't it? Don't overfeed on the real estate. There needs to be enough room there for the OpCo to work as well. And therefore you have to be really honest about what the cost is. But when you look at the depth of wealth and the sheer numbers of people in Europe, then that's a pretty easy solve. But get that right from the word go, absolutely right. And then I think, we suggested, OHF delivers a core plus year in, year out, between 8 and 9 return at the fund level is pretty much what you should be expecting from a good, care home platform. I think if yields come back in too tight again, we've seen that it can lead to, certainly on the forward fund structure, maybe a little bit too much on the development side. So you've got to keep just an eye on that as well to make everything stays balanced. But so where we are at the moment, two strong buckets of return, appealing to two different buckets of LP and capital.
Okay, great. We've come to the end of this panel. Really interesting. Lots to take away from that. I think the idea that we'll be looking at technology a lot more and the influence of that, affordability becoming more key, and just the potential growth of that delta that you mentioned there, Kevin, between 1% and the 7% that it is in the US. Even if it doesn't reach the US levels, you've still got a huge amount of opportunity there. So to be very efficient, what I'm going to do is we're going to welcome Ron and Jochen Zee, who's Managing Director at Imotis. And there's going to be a fireside chat looking, first of all, at the international appetite for Germany, and then we'll pick that up in the panel. So we're going to welcome Ron and Jochen and also say thank you to the speakers from this panel. Thank you very much, guys. Thank you.
Hey, Jochen, you joined the SHHA roughly 1 year ago.
That's right.
How was the journey so far?
Well, I haven't realized that you have so much power. So thanks for that. SHHA, I see you have a broad range into the whole Europe, and I'm happy to be there, and especially to international investors, which we need for Germany, especially for Germany right now after the 2 past years, and happy to be there. Thanks.
Great. Well, we just had a global European panel. The next one will be Germany. This is actually the bridge builder. And to my opinion, you are one of the most respectful, unbiased advisors in Germany. So that's on me, this compliment.
Thanks.
But maybe in a one-line, because maybe not everybody knows Imotis. Can you briefly share what's your core business in just a one-liner?
Yes, so I tried in one line. So we're a consulting company, and we're consulting on the operational side as well as on the real estate side. We support developers, and we also support banks with some analysis and so on. So we have a bright and a broad, deep view in the market, and yeah, I think we want to try this knowledge right now with a big team of almost 30 people in Europe, in Germany, to develop the market much more and to bring more money into Germany, to do more investment, which is absolutely needed, as we heard before.
Well, talking about international capital and also, let's say, your objective, unbiased view. Because I think when we're reading the newspapers are always a little bit or negative or searching for not the right angle or not based on the right data, but just based on your track record. What's your professional opinion about whether Germany is an international investable country?
Yeah, so said before, the activities, the investment activities, haven't been so active as it should have been in the past. We have the boomer generation coming on the market, and we have a big lack of housing for seniors. So we started looking more onto international investors and started discussing with them, also with your help. Thanks for that. We did a short survey about that, and we realized, and it was clear, that a lot of international investors are looking on Germany, but they always seen the same barriers, the same hurdles. And
can you also name a few in terms of what's the typical barrier from an international perspective when they look into Germany?
Absolutely. So a typical one is that we have high regulatory regulation and high building requirements. We have 16 federal states, and well, each state have its own building and operational requirements. But to be honest, in the past they have softened these requirements. So it's easier right now for investors also, also for operators to handle this. So there's the barrier. That's true, but we have a development on the positive side. And some other issue is that we have a high fragmented market. So that's also always said by the investors, that they don't know if there are enough big operators in which they can invest, as portfolios are very fragmented, and it's tough also to find the right assets and portfolios for this.
However, when we did the in-depth webinar, I was actually negatively surprised by the idea that when you're big, that you're powerful and in general good in what you're doing. Because to my humble opinion, and we have, let's say, a pan-European scope, some regional players are excellent in terms of operational business. So I think it's a little bit of a misunderstanding that when it has scale, and of course from an international capital point of view, you need a little bit of scale in terms of also whether they are financially solid. But what's your professional take on, let's say, this regional track record of operators?
Yeah, absolutely. You find very, very successful operators on a regional level, and also the big operators on the national level. They're recovering right now, and we seen right now very good results. We see also some EBITDAs around 10%. So they're recovered, and it does not mean that when you invest into a small or regional operator that everything is not transparent and not so clear. You need to have the right network, and you need to have the right view on this. And together with other participants and consulting companies and asset managers right now, I think we get a very clear, transparent view on this. So it enables also the international new investors or investors that will come back to invest also in more fragmented portfolios.
Yeah, and talking about fragmentation, with SHHA we're always trying to underwrite also the several sub-asset classes. I think when we did the summit in Brussels 2 years ago, we highlighted the movement from aging to longevity, where also senior living, assisted living has a bigger impact. So we shouldn't be solely focused on nursing homes. But when we talk about numbers, and you're also a numbers person, can you maybe share as a Kickstarter for the panel? So don't tell everything, because otherwise we can skip the panel, can go to the lunch. But can you briefly share, let's say from a yield compression point of view, when you compare senior living with regular resi, or let's say nursing home, where are we talking about at the moment in Germany?
Well, we're talking about a core portfolios for nursing homes, something around 5.5%, or this and the senior living we go up to 4.5%. We have just seen an interesting transaction close to Cologne. And the special thing there was that the assisted living, the yields that we realized there were almost close to normal residential investments. So that's also our understanding from the market in respect of assisted living. The less we have a management component in there, and the risk of a rental income is split to more private or to more private leases, then we see definitely that it's coming together. Yeah. And the other side, well, we have also on the nursing home sectors also seen also some a lot of value add things. Yeah, that's also derived from insolvencies in the past. That's something I've heard all the time, that every international investor is confirm or knows about the insolvencies. So we took this as a point of start to analyze this more. And indeed, we had a few insolvencies, but in numbers, saying we only 0.5% in between 2023 and 24, 0.5% didn't find prolongation of a lease on another operator. So all other insolvencies, we found some. The market found some
solution.
Yeah,
great.
Absolutely.
Hey, maybe a final question, and then we're going to the panel, Richard, because I felt the energy of Richard. Like, come on. But
and how difficult is it to keep you
keep
quiet,
time.
Ron?
One
Really
final,
difficult.
and that's, let's say, the teaser for the panel. What about the existing stock in Germany? Because we can talk about newly built, but I think one of the biggest challenges in general in real estate is decarbonization, making social impact, and also outperforming on ESG. What's the status of the existing stock in Germany, and also is that an opportunity or a threat, to your opinion?
Well, we have a big
simple question, is it?
Yeah, it's very simple and easy, and to be honest, it's tough to answer. But I would say we're talking about the 100 billion market up to 2040, and more than half of it it's money for refurbishment and to make it better. So we see a lot of value add and opportunistic portfolios. So a lot of things to be done in the stock, but also new developments for the new generation and the new seniors, the new boomers.
Great.
The new boomers.
And we're going to finalize, because even if Sylvia's going to wave, then I'm in danger. Hey, thanks very much, Jochem. Maybe a big applause for Jochem. And that's a great Kickstarter for the panel, so you can leave the mic over here. And after the panel discussion, everybody is invited to have a healthcare booster. It's still a surprise what it is, but that's at the bar. So we will also meet Jochem at the bar.
Absolutely, and we have some analysis for you, new analysis about invest cost and the insolvencies. Thank you.
So we're now going to drill down more into the German market. So again, a super panel here. So speakers, if you could come up, that would be great. We have Nikolai Schmidt, who's Managing Director for Transactions Healthcare for Swiss Life Asset Managers. We have Stefan Voss, who's a partner at CMS. We have Kip Sloan, who's Managing Director for Schönes Leben Group, Chief Operating Officer at Cofinimo, and Alexander Frozer, who's Managing Partner and Founder of Periscope Living. Great, do join us here. And the topic of this panel is, interestingly, Germany, is it an investable market? So let's first of all, and this is 30 seconds only, just start with introductions, and very much ladies first, Yeliz. So quick introduction of yourself and the company, just so that everybody knows where you're coming from.
Uh, Lady first, you should work on that for the next time. Hi, my name is Elise. I am Chief Operating Officer at Cofinimo. Cofinimo is a listed company investing in healthcare in Europe. We're present in 9 countries and have a portfolio of around 6 billion.
I'm Stefan Voss, partner and lawyer of CMS, international law firm with a full service concept, also concentrating on the healthcare sector. I'm co-head of the German real estate and public group at the moment.
Great, Kip, yeah.
Kip Sloan, I'm CEO of Schönes Leben. We're one of those operators Jennifer referred to as passionate emerging into the market, so thank you for that one. We're now operating on 6 locations Germany-wide, doing premier senior living, which we basically translate as something that is a Robinson Club for the aging people. So all those services you could wish for combined with classical living in real apartments, and we're now aiming at the next 6 locations we're about to open within the next 3 years.
Great, Nikolai.
Hello, everybody. My name is Nikolai Schmidt. I'm with Swiss Life Asset Managers since 2015, and I'm heading the healthcare unit, the German healthcare unit, and I'm responsible for about 1.6 billion euros AUM so far. We want to grow more because we are totally convinced of the asset class healthcare.
Great, Alex.
Alexander Fröse, happy to be here. Managing partner of Periscope Living, investing in senior living sector for more than a decade. Invested more than 500 million euro in this sector. I'm looking forward for this discussion.
Great, and if anybody's got a question, do just raise your hand or come forward or whatever is necessary to get my attention, and I'll make sure we ask that to the panel. Let's just pick up, and I'd like to get everybody's view on this, really, which is, if the question is Germany an investable market? Well, is it? That's the question. And then, is it for international markets, for international investors? So where should we start? Alexander, let's start with you.
For sure it is, and I think it's wrong to say that it's not. It's the most fragmented market we have. And actually in Europe, if you look at the population, with North Italy, we have the oldest population in Europe. So it's definitely a market where you can invest capital. Just depends on if you're looking for scalability or you're just looking for standalone assets, but it's definitely an investable market if we talk about senior living.
Okay, does everybody agree? Who's?
Of course.
Yes.
Yeah. Well, there's no balance on this panel, is there? You know, that's right. Okay, good. But what about the point that Jochen mentioned that there's some of the challenges there for international investors? So, Yeliz, you know, how do you see that especially? What's your sense of that? Some of those challenges for you as international capital?
Well, the challenges were there. They were undeniable, whether it's financial, operational, asset-based, and so on. But I am convinced, and I guess everyone today is convinced, that we're at the bottom of the cycle. You know, the operators have done a tremendous job into reviving their business. I think that everything that could go wrong has already gone wrong. Don't want to jinx it, but for me, the real question is: are we gonna have a V, recovery, or is it gonna be a U recovery? And if it's a U one, how broad is the base that we're looking at? But there are already significant signs that Germany is doing quite well on the international market. UK in Europe is today the biggest investment market due to the several deals that happen, but Germany is number 2. So there is an interest of the international investor that, due to scalability, due to operational excellence that we see more and more, due to the financing structure of the operation business, that Germany is a good market to invest in, yes.
Okay, good. Let's pick that up a little bit. I mean, anybody else can also pick that up, but I'd like to drill down a little bit into what does that mean in terms of opportunities? What are we seeing? Where are investors looking? Where are those opportunities? Do you want to start, Nikolai? Yeah.
Yeah, so we've already seen some bigger transactions in the younger past, like Civitas and MNG, who invested in large portfolios, and I think there are more opportunities, but they are not on market. I think that there is a lot of portfolios of existing asset managers who are struggling right now a bit, and I think the investment managers, they are willing to divest and they are open for negotiations. But to be honest, if you consider buying those assets, you have to have a very, very strong local asset management and a very deep expertise of regulations, etc. Because these assets who could be bought, they have large capex backlogs. The lease agreements, they have to be prolonged or renewed, and etc. So if you consider buying those assets, you need a very, very, very good asset managers.
Okay, good. Alexander, what's your view?
I can just agree on what Nikolai says, and to add 16 federal states, 16 times the different building regulations. So if you do not have this deep market experience and access to regulations itself, it will be very challenging in terms of managing and repositioning existing stock. And I think this is something which have been not done maybe probably in the past. And that's why investment managers or investors who are looking into the sector have deep knowledge and we have high barriers to entry, this kind of regulations that we're seeing. It's a huge opportunity. I think in terms of investing capital, the risk-return profile completely changed. I think speaking for, not for all, but for some German insurance companies, probably the more cash-on-cash driven strategies are going into more IRR-driven strategies, where you say their conservative approach is maybe a bit more, I don't want to say more aggressive, but more proactive in terms of let's really create value. And I think I can just add the last point, which is very important. If you do not have a proactive asset management approach, you will face a lot of challenging situations with just acquiring an asset. So proactive asset management, having deep market experience and a real market access, this is where you will get the, let's call it juice or high, medium to high returns in a short term, medium term.
Okay, good. It would be interesting, Kip, to get your perspective on any of the things that have been said. But also, I suppose, you know, you're having to look at managing the real estate side from your perspective. So how do you see that? What are the things that work for you? And how does that work with, I guess, the real estate investor as well?
I'd first of all like to highlight the opportunity we're facing at the moment, I'd say. Just as Jennifer pointed out before, Kevin, it is such a small number of available slots we have in Germany, and that makes, for my opinion, a perfect time slot to now speak of Germany as an investable market. We have product, we have a couple of operators who know what they're doing and who have excellence in what they do as operators. We have demand driven by demographics throughout the next decades, which is going to be guaranteed. And we have a time opportunity in which the market itself, from the competitor side, has been really, really slow on growth. So there has basically been no expansion if we are looking at premium senior living throughout the last 10 years. And for my example, or for my opinion, it is basically a perfect use case of how to enter a market with big, also international money to just go and grow this area, this field, which has such strong drivers. And for myself, I can, even though it is slightly a different perspective, just emphasize what you two just said before. It is really important to have knowledge about what you're doing. So if you're operating, you can't say, okay, well, I've run a hotel before, now I can do senior housing, or I did student housing. That's kind of the same, only the people are not young, they're old. We're facing an interesting but also very complex market, and that needs to have operating knowledge. So for me, that is very important in what drives an operator into excellence.
Okay, good. Stefan, let's pick up a little bit with you, and any reactions to what's been said are great. But just in terms of the opportunities, do pick up on the point about regulation, because that was an issue, but also in terms of transactions in the market, there was a lot of discussion over the last kind of year about distress, those kinds of issues across the real estate markets in Germany. Is that something that's coming through? Are you seeing that coming through? And is that relevant for this sector?
I really see a growing interest, in particular from international investors. But I think we need to differentiate. So we have on the one hand the senior housing markets, which is more going to be quite careful because there are some regulatory challenges. Nobody knows how the government will change the law because they want to reduce the rent increases in future, and that's maybe one of the big obstacles to invest into these senior housing properties. On the other hand, the care home sector is quite positive. The demographics are pretty clear, so we will need more senior housing and more care homes. And I see that certain states, you mentioned 16 different Heimgesetze in the different federal states, and some states have seen that it's really necessary to give more flexibility for the operators. So like in Bavaria, that the single tenant, or the single tenant, the single bed ratio is not being made so strict. So I think it's a quite positive sign that politicians have seen that they need to give more flexibility for the operators and for the owners as well.
I might jump in onto a regulatory issue because I slightly disalign because I'd say senior living is an excellent opportunity to bypass regulation if you do it exactly as pointed out before with knowledge of the market. So there is opportunity to bypass everything that has to do with Landesheimgesetzgebung to use the existing laws in accordance to what the business model says and then leapfrog in comparison to what we see in classical nursing homes because there's no Fachkraftquote, no big standards into qualification. So that, in my opinion, just highlights or strengthens the market of senior housing, especially in comparison to healthcare as a classical asset class.
Okay, interesting. Let's pick up a little bit and drill down into some of the opportunities. Maybe Nikolai, starting with you. Obviously, in Germany, you've got a range of different cities, but healthcare, of course, yes, works in big cities, but are we also looking at the smaller cities? Are there particular hotspots where people should be looking if they're looking at the German market?
So to be honest, we don't have a certain profile in terms of how big a city must be or something like that. It's more about the demand situation, the supply situation, and the accessibility of qualified staff in the region. So, which is very tricky when we do our due diligence because you can see it at the first glance. But anyway, if the demand and the supply is appropriate, we consider every city or town to invest in. So we don't have any barriers in that.
Okay, good. Anybody else want to pick up that point? I'd be interested to hear your views, Yeliz, on that. And also whether people are really looking for single assets, portfolios. What are you looking for as an investor?
As an investor, I think the important topics are the operator, and everything that Nikolai said actually falls under the operator, the operating business model, and so on. I fully agree with what you said, staffing and offer and demand. Lease structure is an important one as well. You can have the best asset, but if the lease structure, does not fit your investment criteria, that's a no-go. As I said, and asset quality. You mentioned asset management, property management. I really believe that it is one of the pillars today in the investment universe. Yes.
Okay, good. Alexandra, interested to get your view.
So I totally agree with what has been said, but just look at the numbers and facts. I think lots of potential investors talking about LPs now still are a bit scared of regulation, operator risk, etc. If you just look at a clear number, I think till 2030, so next 4.5 years, 320,000 beds are missing in to-be-built units. So there must clearly be a kind of a focus on existing stocks. And it's interesting because I think last year, somewhere in summer in a podcast, I said, in my opinion, I said this actually 5 years ago, we will come to a state or to a situation where different federal states will come to a situation where they say we need to lower regulation because the new stock that needs to be built will not be built, and we can't just get the people on the street because the single room quota or double room quota is just not given. So I think the first takeaway, I think no one should be scared somehow of that sector in terms of operator risk, etc. I think you need to form and build partnerships with leading senior living operator, which one we have here on the panel, for example, and really need to understand how's the OpCo working, what is their goal, do they want to scale their business, how we can participate and do something together in a PropCo-OpCo situation and not just acquiring a deal, have no real review and due diligence on a lease agreement and just take it as granted and saying, okay, this is a 5% cash on cash, whatever happens, happens. I think it's more than ever, yeah, you're laughing, but it's true because in 2019, 20, I think like prior COVID, we've seen this on the market, and it's actually led to the mislocation situation we had in the market, and it has led to some headlines in 22 where specific operators still are no longer on the market. And I think this totally changed. I think in terms of opportunity-wise, there's different views to look at it. I think it's completely different compared to a typical residential unit where you would say on office buildings, CBD, Frankfurt is great to be in a tower. I think if we talk about senior living, it really depends, in our opinion, what Nikolai said, just want to summarize it in 3 sectors. First, like micro location, in terms of what is the resident getting on the asset itself and then the near area, etc. What's the care concept from the operator, for example? Second is the demographic trend on that micro location next 50 years. I know there will be voices who would say we can't predict this, etc. But sure, you need to do some proper due diligence on that one. And the third, if we would now talk about care homes to really understand the trained staff situation as of now and in the near future. Not just how many do I have today, but what is the ERV, estimated rental volume, where this person who works at a care home lives, is it actually affordable rent nearby, etc. And if you combine that, that might be an asset you should dig deeper, and then potentially you have a great deal on the table. So that's my point on it, yeah.
Okay, good. It would be interesting to pick up a little bit about affordability, which came through in the first session there from Jennifer, coming from the States. How do we address that, particularly when we're looking at Germany? Is it an issue for you, Kip, for example?
I think affordability is heavily overrated. Everybody talks about the target group of not being able to afford. There are headlines all over German newspapers stating that it is so hard to age because so many poor people, and of course there is a percentage of the society which ages in poorness, but there's also a huge potential of buying power in that target group. And we're, for me as an operator, targeting the upper third of the income, which makes up logically a third of the population aging, and that population is really wealthy. If we're looking at the net income monthly of a couple in Germany in average, we're talking about 3,800 euros. That is average. If I'm targeting the upper third, that combines with a net worth of savings of another 400,000 euro and a real estate value of another 400,000 euros, which makes my basic target group income millionaires by the time they spend with us. So that is a huge counter argument against the issue of affordability. If we're talking about premier living, our basic rent or our basic package is about 3,500 euros a month. So that is compared to what we now pay in nursing homes, lower than the level we have in institutional care facilities. So that makes a huge case again for this segment of saying, okay, I can really change the way of aging and the depiction of aging because the people can actually choose a model of living which is more self-determined and in which they can choose the different parts. So if I'm looking at affordability, I look at it rather bullish and say there's much more of potential power, of buying power in the target group than is often predicted.
So therefore you're targeting specific areas where there's a high value in that city or in that small region or in that small village, even, I suppose, where you've got that kind of group of people who are there. And what sort of size do you need for that to make sense for you when you're looking at where you might grow to?
I was thinking about adding that to the discussion of locations before, but we used to say the top 30 cities will work for us. It doesn't really matter. They're going to work because we've got enough target group. But with our new locations, we're going further into suburbia because we see the city centers deteriorating, being with a higher criminal rate, being with, let's say, troubled areas. We like to have that in the suburbs of bigger cities or mid-sized cities. That's perfect for us because if we say we've got top third of target group, that is enough even in a mid-sized city. So it can also work in B or C tier cities for us.
Okay, good. And from the investment side, is that the kind of thing that you're also then tracking, that you are then looking at medium-sized cities? Yeliz, Nikolai, Alexander, be interested to get your views.
So normally these concepts are a bit too expensive for us. So that's what we've seen in the past, but we will see what will bring the future. But anyway, you're totally right. There is a market Praemia senior housing like Schönes Leben or Tertianum, etc. But beyond that, there is a huge market that needs to be built for, let's say, affordable senior housing. Because what is the alternative? The alternative is that people who are not able to live anymore at home, they go into a nursing home. There is no appropriate offering for people with mid-scale or low-scale income, and we need this affordable housing for the big masses, because you refer to 1/3, there is another 2/3 which need to be cared in the future, right? So, and that's also very attractive for us because we see a big market there, which is not built yet.
Okay, so the mid-market element there's an opportunity there.
Anyway, we would also invest in premium, so if you give out the right price.
I agree with both of them. So what Kip is describing is really a targeted market where you have this premium, almost residential living, where affordability is then not a problem. Fine, but it is a problem for the other segment, like Nikolai said. I really think that affordability is an important item because investors look at that as well. You know, we mentioned a lot of topics that investors look at. I put it on their operating model. It was described a bit more in detail, but affordability is key. Knowing how the business is financed, whether it's insurance-based, subsidy-based, private pay, and then also knowing that at least during the duration of your lease, that it will work is key. Otherwise, it doesn't really fly. So I agree with what is said by both of the gentlemen. Coming back on affordability, you know, the development market in Germany, Germany was hit like all the other countries in Europe and everywhere by the increase in construction cost, financing cost, and so on. Now, within the 9 countries that we are present in, Germany knew the steepest increase in terms of construction price. And when we saw all other countries leveling and going back to, you know, normal increases in terms of indexation of construction prices, Germany was still increasing. So affordability, you know, it's a broad concept. Affordability of the projects became a problem as well. Now, we've seen that the development market in terms of nursing homes or you know, healthcare in general has slowed down quite significantly. And even if it would start today, it will, you know, permitting, construction, it will take another 2 years to bring back the development market to what it was before, at least. Which comes back to the asset management. You know, the portfolio you have, the quality of that portfolio, the attention that you put on the quality of the assets, it's hugely important. You know, when money was, I don't want to use the word cheap, but let's say easy to, you know, with an easy access, these things were important, but maybe not put under the spotlight, whereas now it is hugely important. And then you can say ESG and so on and so on. And then comes the legislation. And I fully agree with what was said before. If the governments, not if, when the governments will see that there is a slowdown in terms of new assets coming on the market, combined with the increase of demographics, the increase of need for special care, well, the logical outcome is that you focus more on the existing stock and look at the legislation and even, you know, make it a bit easier so that the outlook of the existing stock is more secure as well. I think we're really in an era where the existing stock has so much value and potential for the future due to everything that I said, whereas maybe 5, 6, 7 years ago, the mindset was, oh, okay, you know, it's new building, and maybe a bit less attentive to the existing stock. I don't know if you agree, but...
I have nothing to add. Perfectly summarized. So we totally share the same view. Yeah.
So more of a focus on existing stock, managing that, and maybe does that include if the stock is maybe a little bit subpar, then instead of building you're then transitioning that to a really top-notch?
Absolutely. Top-notch or whatever at that moment is the best use for that building. I mean, I fully agree that we need to look at the trends in terms of demographics and so on. We have an idea on ESG and so on, but let's look at the last 5 years. Everything changes so fast. So at that moment, whether it's nursing home, whether it's, you know, assisted living, whether it's selling to another developer or another investor who has a better use of that, that will be seen at that moment. But, you know, yes, there is a future for the existing stock.
Good. Let's pick up a little bit on, I guess, some of the structures in the market. For example, in the UK, there's a lot of discussion around integrated retirement, communities, different types of things coming through. What works at the moment in Germany? Is it something that there's a sort of experiment trying different things and we will see what works in the market? Where are we? Have we got the right concept, or is it evolving?
And then I'm going to stop. Yes, I think it's evolving. I think it's evolving due to, you mentioned technology, right? Technology is evolving, financing structures are evolving, the needs are evolving, the diseases are evolving, you know, everything is evolving. So it would be naive to think that everything will stay the same for the coming years. I think the most important thing is be sure of the location, and be sure of your asset. Your asset needs to be flexible. Your asset, you know, you cannot just break down a building after 20 years and do something else. Can you use it? Can you transform it into other uses easily? So, yes, but then again, you know, I think that's the beauty of being an investor or an operator, is that you adapt along the way to what changes come ahead. And what we've seen in the last year is that there were too many changes at the same time, and people, you know, operators or investors had some trouble getting the pace on that. But I really think that there are lots of opportunities and that we will see what the future will bring. Obviously, the development market has to follow on that as well.
Yeah, good.
I'd probably like to add, although I might not be 100% neutral on that opinion, but I think Germany is only at the dawn of a new era in which we have more sophisticated classifications in living, in later living, saying that, of course, there is a huge market for nursing homes, and that is immensely important, but that there are also different categories, say, below in a tendency of care dependency. So getting the people to move in earlier, getting the people to orient more into what you mentioned as an integrated retirement community. So basically being in a location of of services combined for people who are fitter, who are not that aging at the moment of actually entering the communities. And that is something that we in Germany are just beginning to develop on an operating side at bigger scale. There are already actors in the market who have their spot, but it has not been expanding in the quality of the target group that has been expanding already in the past 10 years and will be expanding immensely in the next 10 to 20 years. So I guess we're at the beginning of something that's actually going to change the market a lot in the coming years.
Okay, good. Nikolai, did you want to pick that up?
Well, just a quick remark on what's new in the market or new concepts like retirement homes or new forms of assisted living. What I do observe is that right now only project developments with usages like premium senior housing or nursing homes with investment cost beyond 40 or 45 euro per day are possible to be developed because of the financing of the development. So other concepts, they are not lucrative enough for the developer, and we as an exit partner, we are not able to pay the prices which have to be paid for this type of use, right? And this is why we are struggling a lot, and I don't see so much assisted living as new buildings right now. It's more renovating the existing stock. Yes, that makes totally sense. And perhaps some premium usages, but beyond that, I don't see too much because it's not affordable.
I would like to add on that one. We're talking a lot about concepts and what probably we like as what we are promoting, etc. Trying to be neutral. If I zoom out and we're talking about capital is investing in that market. For sure, there's this 1/3 target peer, for example, who at a specific spot this works and you have the purchase power, etc. there, and your operating model works. But speaking from an insurance company or pension fund, if they invest into a fund or a vehicle, first they don't want to be alone in that one, and they don't want to have like a single asset transaction. So if they look into that, they would say, okay, if I deploy 100 million, someone else deploys 100 million, how fast, first of all, how fast and what kind of quality of assets do we get to be invested in? Because they would like to have day one cash on cash or cash flow at the end of the day. And secondly, I like the idea, and I totally agree. I think we are, speaking for the German market, in a situation where a new era steps in of a lot of different concepts. But the investors that invested in our funds always challenging me with, actually the main question is, where's the scalability? Okay, you have this one project, that's great, it's a 40 million deal. Do you have 5 others? Because we need diversification. And we want to make sure that this is not just a single trade-off deal. So, and then coming back to what I said earlier, just pure facts, 320,000 beds are missing till 2030. We're talking about care homes. We understand that the building development activity is kind of not there where it should be, so this is matching. And for sure, we have kind of a funding gap. If I look at the eastern part of Germany, I think the average in Sachsen is the average pension is 1,100 euro per woman and 1,300 euro per month for a male. And then having this kind of funding gap makes it very challenging to have kind of affordable living. But I do think what's very important to say is, even though there's lots of great ideas and lots of innovation, the scalability that's what capital actually at the end is looking for. And then I think what's another point I want to add is, if we talk about senior living and someone maybe sells off his house and says, I'm entering into that asset because I need care, I reached a specific age, etc., we should talk about more the nominal value per month than euro per square meter. Because it might be a 40 euro per square meter, but it could be a 40 square meter room with so much great, as Schönes Leben is doing some promotion now, with so much great specific community areas, etc., library and whatever, etc. So I think put this in a context, capital will always challenge you with, if we invest, where's the scalability? And my personal opinion is, We see it in the senior living sector. We talk about care home and assisted living facilities, but you need to do proper due diligence on the OpCo and on the PropCo side.
Okay, good. Stefan, I just wanted to come to you on that discussion around whether or not it's acquisitions, existing assets, whether people are putting more money into that, or whether or not it's new development. Are there different kind of incentives for either of those? Is there a difference for investors who are looking at new build versus acquisition?
I can share from my experience the view, which was already discussed, that new projects are really not very often. So the majority of the transactions and the due diligence procedures we're doing is for existing properties, in particular where some intensive asset management needs to be done. So leases which have only a maturity of 4 to 5 years. So you have something to be in mind what you could do with these properties. They are not fit for the actual situation, in particular for the ESG requirements and also for the structure of the single and double room. So I think the majority of the investors is quite cautious, but they're still interested because they see really the big chance or the big opportunity that are combined with such properties. And another issue in Germany in particular is that the majority of living or of the houses is not possible to inhabit people who cannot walk. So it's very difficult for people who need a wheelchair. So one of the big tasks would be in the future to get some modernization on place so that you have elevators constructed so that you have more accessible apartments that can be used for elderly people. That's also a very interesting thing.
Okay, good. It would just be interesting to pick up on who is investing and in what. What are we seeing in terms of either yourselves or international capital? What are you looking for? What returns are you seeking? What are the opportunities? Who wants to start the...
Okay, I'll start. In general, or what we are doing?
It would be... what
just
returns
kidding.
are you seeking?
No,
What's the...
look,
More specific financial criteria.
So generally speaking, I would say the international capital looking into that sector, Europe or specifically Germany, because we're talking about Germany today, it has a different risk-return profile. It's not more cash-on-cash driven, it's more an IRR play for them. So they're more of a value add, I would even say, opportunistic view that they have on that one. So so international investors we are looking that we are talking to, not that interested if you say, look, this is a 5% cash-on-cash with lots of capex measures in place, where in return a DACH region or German institutional investors would be more conservative in terms of, okay, if we really have a sustainable rent and we can invest a specific portion of our asset allocation policy into the healthcare sector, we would be more cash-on-cash driven. So I would say international capital might be more exit-oriented, where German or DACH institutional capital is more mid to long-term holding oriented to this investment.
Okay, good. Any other takes on that?
Totally agree. Especially the international investors, they are very opportunistic and they require higher yields and higher volumes. So, and that makes it really necessary that they got a very good and deep asset management to rise these yields and these IRRs. And beyond that, I think there is a small focus on medical centers, if we can sum it up to healthcare, because it's a different lease structure. It's more, we have very, very good tenants. They are very creditworthy, and it's more more based on a office building, like so. And that's what investors are seeking of. And beyond that, assisted living is another focus. Nursing homes, they are very picky because of the operator insolvencies we saw in the younger future.
Okay, good. Yeliz, what are you looking for in terms of returns, particularly for the German side? Are you allowed to say or not? you're not allowed to say, then don't.
Sure.
Just
Well, simply read the latest press releases that we had, and there you see what kind of returns we're looking at. And maybe there's still some challenge on the German market there. You know, the prime yields that are written in all the reports, I haven't seen a lot of those happening. So maybe Germany is lagging behind compared to other countries where there were more deals. Having said that, you know, as I said, it's in recovery, and I really believe that there will be more interest in Germany by the international investors with the models that were described before, because of, again, what was mentioned before, scalability. You know, it's also the financing system of the operations, perhaps not for the 1/3, but for the majority of the residents, can have challenges, and we've seen that in the past with, you know, authorities lagging in increasing pricing caps and so on. But it has a lot of security and a lot of appealing power to investors as well. So I really believe that the fundamentals in Germany, where it's the country with one of the highest rates of increase in terms of demographics, because of the financing model, because of the professional operators in the market and so on, I believe that overshadows, you know, all of the problems in terms of legislation and so on. So the answer is yes.
Okay, good. And Kip, are you allowed to talk about M&G?
A little, maybe.
Okay.
From a different perspective, we do see a lot of interest in the German market from international money, and I think, as a personal opinion, it is easier for me to explain my business to an international investor than it is to a German, because they're just more used to the scheme we play. They're more used to the higher yields we can achieve on the development side, but especially also on the operating side, which I do sometimes feel as sort of a little bit of a misbelief in what we do. Like, can they really do that if I'm talking to German investment money? And if I talk to international investors, it's easier. Regardless if it's Scandic money or money from UK or US, they are more used to what this IRC schemes actually do and the more residential part of it. And with the transaction of our project in Afstadt, which was a development we did on ourselves and sold at the beginning of this year to M&G as a UK international investor. That was basically, I think, also something really important for the market to just be able to outline and share that this is an asset class that is also tradable. Because in the market there has not been much movement, and so Afstadt was a rather important play to gain and attraction to show that how can we evaluate such bigger developments, and how also can we evaluate the operators in this class of premium senior housing.
Okay, good. And Stefan, obviously international law firm, CMS, so you're seeing a lot of these initial kind of views coming through. Are you seeing more of an increase in terms of the interest for international capital in looking at specifically this sector?
Yes, obviously, compared to the situation 2 years ago, I think it's really an increasing interest. That's pretty clear.
Okay, good. Last question to everybody is, are you looking to grow your activities in the German market? And do you see the German market growing overall in this space?
Yes.
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 Very
My
good short
shortest
answer. Yes.
today.
Definitely yes.
Definitely yes.
Yes.
Okay.
Sure, 100%.
Yep. Okay.
But there are two less offerings, to be honest. So we need more developments which are affordable for us. And I think it won't work without any direct subsidy from the government or, I don't know, from politics, because otherwise the rents will rise because of the rising costs, and that is no solution at the end. So I think there are some measures that can be taken very easily, like abolishing the real estate transfer tax for healthcare assets, or abolishing the VAT for construction and management costs. So that would make the project development in Germany roughly 20% cheaper. So that's a really, really big issue, but nobody dares these steps.
Well, that sounds like a lobbying point for the SHHA.